We come into Wednesday with the US dollar giving back gains from the weekly open that had been fueled by optimism around the news of renewed trade talks between the US and China. It seems market participants were more realistic about the impact of this news, conceding this shouldn't necessarily be taken as a sign of the US relenting on its soft dollar protectionist campaign. The euro was supported into dips as a result, while getting some more prop from reports the ECB wouldn't be looking to introduce additional stimulus at the upcoming meeting. Meanwhile, it was learned that Christine Lagarde got the official nod to take over at the ECB. Moving on, the pound was less fortunate on Tuesday, unable to benefit from broad-based US dollar outflows as it needed to contend with worry around another discouraging PMI print, this time construction PMIs, and warnings from Governor Carney about the possibility the BOE would need to consider a policy response if fallout from the rise in protectionism intensified. Elsewhere, the Australian dollar did a good job holding up despite the early Tuesday RBA rate cut, with the market buying Aussie on the fact of the anticipated result and perhaps feeling a little better than that on a slightly more upbeat tone and some solid Aussie consumer confidence readings. In the world of equities, U.S. stocks were okay to consolidate just off record highs, with investors now focused on an S&P 500 breach of 3,000. We continue to warn of the intense downside risks to stocks in a world where central bank policy and government stimulus measures have been exhausted, but at this point, there has been no catalyst to trigger reconsideration of this reliable trend. Looking ahead, we get some services PMIs data out of Germany, the Eurozone, and UK, BOE speak from Cunliffe and Broadbent, and a batch of US readings featuring ADP employment, initial jobless claims, trade, ISM non-manufacturing, and factory orders. That's all for now.